What's up, guys? It is the Bad Wolf, the international man of mysteries. Let's get into it. So, this particular video is about an IUL or an Index Universal Life policy. Now, why would this be on the Wolf's channel? Well, I'll tell you why, because I want each and every one of you guys to live a better life. I want you guys to do uh, all the things that you guys want to do, really, as long as they're positive and you're not hurting anybody as a non-belligerent, non-combatant. But more so, an index universal life is something that many people probably have not heard about out there. Now, you've heard of life insurance and whatever else, but what we're talking about is something known as a cash value life insurance policy, where you actually get to become your own bank. Yep, you heard that right. So I have a presentation set up here. Um, I am going to have my lovely AI read through it. And yeah, we're going to educate you guys on why this is something that you might find, matter of fact, why you wouldn't have this, even if you start low or small, it's going to be a lot better. And I mean a lot better than putting your money in a normal bank account. This is a game changer, guys. So we all know how we've already bailed out the banks and we haven't gotten our money back. Okay. All right. At least, well, not to my satisfaction anyway. Bailing out banks. How does that work? A bank supposed to have money, messed up their own finances, and had to ask we the people to bail them out, to which we haven't been paid back in full plus interest. But if we go to the bank right now and they look at our stuff and we're not 100% perfect, which I'm pretty sure almost all of us have experienced at one point in time or another in our life, they then want to deny us. But yet they, through the government, accessed our money to keep the system going. So anyway, I digress. I digress. Um, so with us putting money in the bank, and understand this, guys, for you to make what is it now, like point 0.2 or point 0.5 or less percent or whatever it is, they're almost always going to be making at least 4 to 10 times whatever it is they're paying you. At least. At least. That's how it works. They can't pay you 1% and only be making 1% or less. So, and remember, if you follow my channel and you have, or in the future, you should have a tax exempt EIN, domestic, some type of trust, generally irrevocable, not with your name as the name of the trust, but your normal name, your legal name can be inside the trust as a grantor and trustee. That account should be zero interest bearing or no interest bearing account. Because when you accept the interest coming in, that is a public contact, that is a public benefit. It's also a Trojan horse for them to be able to access your bank account if your other bills and whatever else aren't paid, or they want to garnish it for a lawsuit or child support or whatever else, because your legal name and that public contact are two key points, and well, we won't get into all the minutia, but those are the general things that allow them to access it. Whereas if you get a trust, an irrevocable trust, and you open it up correctly with the EIN, use that to open up the bank account. The name of the trust isn't your name, so then that allows you to have privacy. In other words, they can't touch the money in the trust because it's not your money. And because that trust account is not receiving any interest, because if you get interest, an interest bearing account on a trust account, that's a back door. It's a Trojan horse. It allows them to say, oh, well, you make a public contact, you're receiving it, continuous payments from the public side. So that's, you know, a way in. So you want to avoid that by saying, nope, I want a zero interest bearing account. They're going to look at you a little funny and whatever else, but that's what you need. All right. So Once you have that all set up and you use that, that is how you can keep them out of your personal affairs. But an IUL is you becoming your own bank. So let's take a look at why, what the benefits, what are all the goods and all the bad. Let's see what we got here. All right. All right.
etc.
Et cetera, et cetera. Right from here.
How to become your own bank. The truth about IUL and whole life insurance. Intro, 1 minute. Speaker, hey there. Have you ever heard the phrase be your own bank and wondered what that really means? Today, I'm breaking down exactly how people use indexed universal life, IUL, and whole life insurance to build wealth, access tax-free cash, and create financial freedom without needing a traditional bank.
All right. So you heard it. Let's go over some
We'll
things.
go over what being your own bank really means, the difference between IUL and whole life, the benefits and real drawbacks of this strategy, who it works for and who should avoid it. So grab a coffee, take notes, let's jump in. Section 1. What does it mean to be your own bank? 2 minutes. Speaker, when you hear be your own bank, it refers to a strategy where you use a cash value life insurance policy to build up cash savings inside the policy. Borrow against that cash for anything you want, the car, house, investment, emergency, without applying for a loan. Pay yourself back instead of a lender. It's about control, liquidity, and legacy. So instead of keeping money in a savings account earning 0.01% and borrowing from a bank at 10%, you keep your wealth growing inside the policy and leverage your own money at low interest. Sounds powerful, right? But let's break it down. Section 2. Two main types, IUL versus whole life, 3 minutes. 1. Whole life insurance. Fixed premiums. Guaranteed death benefit. Cash value grows at a guaranteed rate plus dividends from mutual insurers. Very predictable, stable growth. 2. Indexed universal life, IUL. Flexible premiums. Cash value growth is tied to the stock market indexes, like the S&P 500. You get market gains up to a cap, but no losses due to market downturns. Potential for higher growth, but more moving parts. Key difference. Whole life equals stability and guarantees. IUL equals flexibility and potentially higher growth. Section 3. Benefits of being your own bank, 4 minutes. Let's talk benefits of using either whole life or IUL for banking. White heavy check mark 1. Tax-free growth. Cash value grows tax-deferred, and if structured right, you can borrow tax-free. White heavy check mark 2. Access to cash anytime. No credit checks, no loan applications, you borrow from yourself using policy loans. White heavy check mark 3. Uninterrupted compound growth. Even when you take out a loan, your full cash value keeps growing, as if you never touched it. White heavy check mark 4. Debt recycling. Use policy loans to pay off high-interest debt, then pay yourself back on your terms. White heavy check mark 5. Legacy protection. Death benefit passes tax-free to heirs. White heavy check mark 6. Privacy and asset protection. In many states, cash value is protected from lawsuits or creditors. Also, it's not reported like bank savings are. Section 4. Disadvantages and risks, 3 minutes. Of course, it's not all sunshine. Here are the downsides you must understand. Warning 1. High initial costs. Most of your early premiums go to fees, commissions, and insurance costs. It may take 3-5 plus years to build meaningful cash value. Warning 2. Complexity. Especially with IULs, is caps, floors, cost of insurance, fees, not easy to DIY. You need a skilled agent. Warning 3. Loan risks. If you borrow too much and don't pay it back, the policy could lapse, and you'd owe taxes on all gains. Warning 4. Overpromising agents. Some salespeople pitch these like magic. Be cautious of illustrations showing unrealistic growth, especially IULs. Warning 5. Requires discipline. You're the banker now. So if you borrow and don't repay, you sabotage your own future wealth. Section 5. Who should use this strategy? 1.5 minutes. This strategy is not for everyone. It's best for people with consistent income who can commit to funding it for 10 plus years. Entrepreneurs or self-employed individuals. Real estate investors who want liquidity and leverage. Families looking to build multi-generational wealth. Avoid it if you're struggling financially or need access to money in the short term. Section 6. How to start, 1.5 minutes. Want to do this right? Here's what to do. Work with a licensed, experienced agent, not a newbie chasing commissions. Look for mutual insurance companies with strong dividend history, for whole life. Structure the policy for high cash value, not high death benefit, called max funded or using PUA riders. Treat it like your personal bank, only borrow for things that grow your wealth, not just vacations or toys. Conclusion, 1 minute. Speaker, being your own bank is one of the most powerful wealth tools available, when done right. It takes time, commitment, and understanding. But the payoff is real: tax-free income, generational wealth, and full control of your money. Don't fall for hype. Learn the rules, and you can truly become your own banker. Thanks for watching.
All right, all right, all right. So essentially, what does this mean? So it's the short version. We'll give you the wolf version. You are creating generational wealth. You are saving your money where you can then borrow against what you've put in and what it earns within this policy. It has high growth potential because we all know the S&P is going to continue to grow and grow forward. You're going to be paid and compensated more than banks. It also then means that it cannot be touched. It's invisible to your creditors as is. You don't even have to like try to hide or anything because it's already legally hidden. You don't have to worry about taxes on it. It's tax free. Governments hate it, the states hate it, but it is a legitimate policy and strategic tool for financial wealth and growth. So, now before anybody asks, do I have anybody specifically in mind at this point in time? I do not. I would recommend doing, either a Google search, or and seeing what the top results are. Generally, the top page is going to look pretty good. But you know what? Let's jump back over there and let's ask the AI in such a matter. Okay, we'll say the top five IUL providers in the country. All right. So in 2025, the top five IULs or Index Universal Life would be, and I'm not getting paid from these people, but if they would like to pay me, that would be fine. But right now, this is not a paid endorsement or anything else. I'm not responsible for your particular experiences, et cetera, et cetera. But Allianz Life, Nationwide, Penn Mutual, North American Company for Life and Health Insurance, and Pacific Life. All right. So once again, Pacific Life, North American Company for Life and Health, Penn Mutual, Nationwide, and Alliance Life. All right. So there you guys have it. Um, Obviously, do your own research when it comes to these things. But this is definitely something that I myself would like to get into. And so as I do things to better my life, that's why I make these videos. Everything here is not like some script or it's acted or whatever else. This is literally me showing you guys the things I've learned in my experience upon this earth. And I've been learning from a lot of key people, and I like to obviously move better in every way, shape, form, or fashion. So, if you think this is something for you, then I would definitely suggest checking out one of those companies and, taking advantage of that instead of putting your money in the bank. We're just so used to normally putting our money in the bank, but let me say this carefully and correctly. I'm not saying not to put money at all in a bank account. You can do whatever you want to do. You're grown, or you should be. What I'm saying is that put a percentage, because if I've learned anything from personal things I've gone through and wealthy investors of all different everythings, is that you should always diversify what you have, even if it's only a small thing. So let's say you can only do like maybe, I don't even know, $50, $100 a week or a month, whatever it is. That's all you can save. Let's just say that's it, right? Put half of it into the IUL, or hell, a third, a quarter, whatever, something. I'm also the type of person that will tell you that if you can pay, round up two things, whether you're paying your house off, your credit card, your whatever else, round it up. Sometimes you have to sacrifice a little bit for the day in order to be better for tomorrow or for generations after you, and then raise them right to understand the value of a dollar and to take accountability and responsibility for themselves and their actions. So you're paying your phone bill and it's like, I don't know, 137. Just pay 150. Pay everything a little extra so that you can help bring those things down quicker. I'll also tell you this, large expenses like your house or your car, as much as you would like to pay those off sooner, there's nothing wrong with that, but understand that those are anchors to your credit. And through some personal experiences, if you pay those off um, sooner, it means your credit's going to tank unless you have something in place either right before or during, because they are anchor credit establishing tools. All right. So divert some of your money into an IUL. This is not legal or financial advice or whatever else. And for other people, I would definitely look into certain specific cryptocurrencies that are probably going to increase in value. And understand this, guys. Um, there's a lot of people in positions right now that are prepared to make a lot of money on what's coming. And if you guys don't know what's coming, it's digital currency. So all I can tell you is that if you can invest in certain things, you probably have a good chance of making some money because they want to make everything go digital. And certain things help make that happen, educationally speaking. So put your money in good places, make your money grow for you. Work smarter, not harder. And I'll talk to you guys later.